So in this video, I'm going to talk about the 5 key financing strategies that I employ when it comes to buying projects for title splitting. So in this video, I will cover these 5 main items. So cash, using my own cash to buy things. Second is using investor finance. Third one, we'll talk about buy with delayed completion. Then we go to, I'll explain around bridging finance. And lastly, talk about how you could also do it or the more convoluted way with buy-to-let mortgages as well, depending on some of the products that lenders offer. So we'll take each one at a time, and I'll walk you through some of the examples of financing. So another good way of actually financing your projects that you are looking to split and create new title and disaggregate them is to use this time around cash, but via investor finance. So here you'll be tapping into your investor networks, the people who A, know about what you do, B, trust your judgment, and C, can see credibility of what you've done before perhaps, and who are willing to lend you money so that you can then invest in those title splitting projects. Currently, right now, as I record this, we are in November 2020. We've just started the second lockdown in the UK. And things are going quite array for the economy. Investors are looking for other places to put their money in because the banks, quite frankly, are not really a place that you want to be parking money now. We're even talking about negative interest rate by the Bank of England. So it's, if anything, now is the absolute right time to be approaching investors for investor finance on some of your projects. So don't be shy. I think, if you are confident in your ability to source the right projects, you should then be as confident with your numbers and what the profitability of these projects. And the third thing is you should be very then clear and confident to be going out pitching for that project, either as a JV, but ideally as an investor finance that you can then pay them either return per month as an interest rate. Currently we're talking, I think the banks are paying 0.1%, even if you give somebody 5%, 8% return, depending on how much you're borrowing, that's not a bad return for them. Failing that, if they are funding, let's say, a lot of that project and you're putting in very little or sweat capital that you're putting in, then potentially you could also sweeten the deal by saying, look, I'll pay you a per month interest rate, but also a percentage of the profits that I then generate at the end of the project as well. So, there are multiple ways you could actually work with investor finance to help you and help them, quite frankly, as well. So it's a win-win for both. And the reason why I like investor finance also is, A, like I said, it's win-win. So you win because you get the right projects funded much easier and less hassle with lenders. But obviously you've got to make sure that your contracts are tight so you protect yourself and the investor. You either put it as an SPV, buy the project under SPV with the investor tied to that SPV as a long-term loan provider. But again, please speak to your accountants on these. The other thing that I like about investor finance is, like I said, everybody gets paid. So the investor gets paid at this, continually. I like paying them per month so they feel that they're earning some money on their money, and also at the end they get a bit of a bumper payment as well at the end, and then they get their money back once the project is finished. So there's different ways you could actually approach investors and investor finance, but in my opinion, I think that's the second best option to go for when it comes to title splitting. So you're not then having to jump with the hurdles of conveyancing, what's the word I'm looking for? Surveying and convincing lenders and explain to lenders, as well as paying all the arrangement fees that comes with all the other type of finance we're going to talk about next.